Good morning, everyone, and welcome to the European crossover webinar. And gone and received some data. Right here, you can see we actually had earlier in this past hour, we had got the Spanish manufacturing PMIs. It came in a little bit weaker, as well as Italian, a little bit better in the Italian and French manufacturing PMI. Well, actually, just a little bit better, 49.8. And then right before the hour that we just came into, we got German manufacturing PMI come in just a tad weaker, and then German unemployment coming at minus 9,000. And then, of course, right now, just Italian unemployment right here at 9.7%. We do get Eurozone, actually, that just came out right now, the Eurozone market manufacturing final PMI, which came in right in line at 51.7. At the bottom of the hour, we will get Bank of England consumer credit and mortgage lending data. And then at the top of this next hour, HICP flash for Eurozone. We'll also get New Zealand dairy prices. That'll be as we move into the States. And then at 9:30 Eastern, we'll get Canadian market manufacturing PMI and manufacturing PMI final here in the States at 9:45 Eastern, as well as at 10 a.m. Construction spending, ISM manufacturing PMI, also obviously a component of that is going to be prices paid, employment, new orders index. And then we'll get Texas Services Sector Outlook and Dallas Fed Services. That'll be at 10:30 Eastern. You can see here with the euro, we're actually pushing up high right up here at this, right almost at this 1920. Our bias chart resistance for today, I think, is 1996, I think, or 1992. So we're just right up there. And cable, I think we kept the same bias chart resistance, which was 3408. You can see here we've actually pushed up a little bit higher than that, up to, wow, 34.42, as the dollar is really under some pressure. And the dollar on the weekly chart, you can see here, this is an area we're looking for it to get to, which was potentially 91.42, which is not only that level, but also is 91.42 is a 78% of this area. We'll get to that. Yesterday we had our bias chart support 91.94. I think today we do have it down here to 91.42, confluence with 91.42. 78% of 88.25 down here, all the way up to 103.03. We haven't got there yet. I'm surprised we haven't pushed even lower, but we are essentially right on this trend line. The indices, well, we can go in and pop into those. Another new high in NASDAQ overnight. So we closed at the highs, but we pushed even further now, and these markets have just gone bananas. S&Ps yesterday, they did pare back a little bit. You can see they're reasserting themselves. And then we saw where the Dow actually sold off yesterday. It's come back a little bit here. And I know that the Russell was ended up selling off, actually sold off, maybe pushing up a little bit higher. But you can see here, this move continues going higher. Just it's unbelievable in this move. We'll go on and go over the news. So the Australian dollar breaks 74 barrier. RBA goes dovish light. The Australian dollar scaled the 74-cent barrier on Tuesday to reach a new two-year peak as a prospect of a bottomless U.S. policy stimulus fueled demand for reflationary trade, overshadowing a dovish turn by the country's central bank. The Aussies look set to score its seven straight session gains of 74.07, having cleared major resistance at the December 2018 top of 73.94. The next target is going to be 78.40. The New Zealand dollar reached the highest since June last year, 67.67, breaking resistance at 67.55 to its next target of 67.89. The currencies have been on a tear as the Federal Reserve breaks with decades of policy practices to focus on supporting the employment rather than in fighting inflation. Ensuing rates will stay super low for a long time to come. The Federal Reserve of Australia is sticking with its 2 to 3% inflation target and kept interest rates steady at a quarter basis point after a monthly policy meeting on Tuesday. Yet, as it did expand a funding program for banks and extending the deadline out to mid 2021, which should in turn encourage them to keep lending to customers. The RBA Governor, Philip Lowe, also noted that the board continues to consider how further monetary measures could support the recovery, a dovish addition that might be a nod to the Fed's shift in stance and its impact of the Aussie. Policymakers appear to be increasingly uneasy about the strengthening Aussie due to last week's Fed pivot on inflation targeting with the currency near two-year highs, said Craig James. A stronger currency is more challenging for exporters and for the Reserve Bank to meet its own inflation target. For now, trade flows are favoring the Aussie, as data showed the country boosted its largest currency account or current account surplus on record in June quarter of 17.7 billion. For now, equal that implies a demand for the currency from trade flows for the reserves and years of deficits. And the dollar sold broadly as bearish mood weighs on rates and outlooks. The dollar fell toward multi-year lows against major currencies on Tuesday as investors stepped up the bets. The Federal Reserve's new policy framework meant U.S. rates would stay lower than the rates in other countries. The Australian dollar held around a two-year high again against the greenback after the RBA's kept policy unchanged and expanded its cheap funding for banks. The U.S. data calendar this week is full of important releases on manufacturing, durable goods, and employment, but positive results are unlikely to halt the dollar's decline due to strong expectations that rates will remain extremely low. The dollar is weak not only against the G10, but other emerging currencies. This shows that the dollar is in a downtrend that will last for some time. Low rates and an excess supply of dollars are driving the market. The dollar was quoted at 90.06 Swiss francs, and the greenback is eased to 105.75 yen. The Fed's historic switch last week to focusing more on average inflation and higher employment means that it has leeway to keep the benchmark rates lower for longer, which has encouraged dollar bears to sell the currency. A decline in long-term yields on Monday highlights the strong headwinds facing the dollar. The largest factors in the ruling Liberal Democratic Party has thrown its support behind Yoshida Suga, who currently serves as Chief Cabinet Secretary. Suga is a close ally of Abe and is likely to continue many of Abe's policies, and if he becomes a prime minister. And let's see here. This is just an overall look about the dollar woes are only beginning, say the bears. Let's going to see if I could share this story. Mm. If I copy it out, these graphs don't show up. When I copy that and put it on, what is that, Twit Longer, which I still have that, but I don't think, if it's a shared story, I think you can share it, but if it's not, then it doesn't allow it, I guess. Settings. Goodness. I guess it's not going to allow me to share it. I can copy it out like this, like that, but the graph it won't translate into what you'll call twit long. It won't post a graph. Anyway, there are dollar bears, and then there are bears. Then there's Youth Lindell, the chief investment office of currency management. The U.S. country will plunge 36% against the euro over the next year or so, taking it to levels it's not seen in more than a decade. The greenback's recent weakness is the beginning of a very large move that could hurt the droves of investors and expected to be hold to the holdings of U.S. stocks and bonds, Lindell said. Wall Street is swarming with bearish dollar forecasts, though few are as extreme as Lindell's. The U.S. currency is near its lowest level in 27 months and is down about 11% from its 2020 peak against a basket of its peers at Goldman Sachs and UBS in general. Societe Generale. Hedge fund bets against the dollar in futures markets are in their highest levels in about a decade, according to data from the CFTC. You can see that here. Let me see if there's anything of any real note. Lindell research breaks down the dollar's fluctuations over the decades into 15-year cycles. That's why it'd be important for it to be able to share this. But like I said, these graphs don't translate if I post it into Twit Longer. Most bearish investors expect the dollar to depreciate on the back of stronger economic growth outside the United States. I won't spend too much time on this. But like I said, if I could share it, and it would pop up, but I don't think it only does it if it's an allowed shared document that Reuters posts in. Apparently, it's not. I know there's stories I can share. Apparently not. Mm-hmm. See if it is. Mm-hmm. See, it won't share. I mean, unless you're already a Reuters. I thought it might be a good story, but anyway, that being said, so I'm just going to get rid of it. Hang on. There. Okay, so let's just go on and move into the analysis. And let me get the bias chart going. So the euro kept in a tight range on Monday, albeit with an upside bent. Resistance remains 1952 with 1992 beyond. Support will be in 1861. So, okay, it was a 1992 beyond because we were still holding 1952. Or actually, I think when I did this in Asia, I think we were at 1938. So I put 1952 with 1992 beyond. You can see up here, the top of this little zone-ish thing is going to be 2031, but at least for now, we'll just stick with this 1992 as the beyond level. And onto the cable. Holy smokes, man, this cable, look, it's going for 34.66. And we're looking at the weekly chart. We have to do that because to get a perspective with these new recent highs. Cable closed Monday with a spinning top doji. A pause may be in order. Well, actually, we just added on to it. I'm not sure why this is. This is odd. Oh, because it's on a weekly. That's why. No wonder, doggone. I'm thinking, what happened to the spinning top? Let's switch it to the daily. And it had a little bit of a spinning top, but you can see here that if you look onto the um, weekly chart, it's heading for 34.66 right now. So that'll be the bias chart resistance. Man, this is unbelievable. And support. This is something else. Support will be right there, 33.88. We should go with that hard right there, which is 33.82, which isn't saying a whole lot. Let's move into the Aussie dollar. I've already had these, so if you missed yesterday's, I'm sorry, but this has already been explained out. So everything was done for weekly charts for perspective, with the exception of Euro Kiwi. So all we're doing is just updating today's, daily levels on this. So I'm not going to focus any longer on these weekly charts. Other than I'm going to show the weekly chart, but for perspective, I'll just be notating the daily. So, like I said, if you look at it, here is the weekly chart, but obviously this is just within just this 1 week. It's going to show. It's not going to show yesterday, so I'm just going to go back and forth. So I'm sorry if you didn't catch yesterday's show. Let's go in and see here. Going to the daily. So it looks like we're heading for 74.27. You can see we also had like a bit of a spinning top here, although we kept in tight range, but it's still adding on. So the Aussie closed higher on Monday as it moved closer to the major weekly level of 74.27, which will be resistance. Support remains 73.07. So 74.27. And this can remain the same right here. And as I said, if you take a look at here on the weekly, you can see 74.27 is huge. Going into the Kiwi. Kiwi, we actually had 67.58 as the resistance, which you can see confluence with 67.56 of the 61%. Once again, all this stuff was already dated yesterday, so if you missed it, I know some people weren't here because it was the last day of the month. I'm sorry. We're not going to focus anymore on that. We spent some time going over all these weekly charts, so we're just updating the daily. So I had 67.58. We're gently above it, so resistance right now is going to be 67.83. And support is going to be, if we were to see a pullback, say 67, actually right there, 67.31. Okay, moving into the dollar CAD. Once again, going back to the weekly chart. The dollar CAD closed at new lows. Support will be major weekly level of 29.82 with resistance at 3,100. We're not too far away from, look at that, 29.82. And that's, you can see the significance here, this weekly level. Resistance, on the other hand, here's that key week level 30.46. We actually had 31.46, but you can see as this market continues to move lower, and we'll go with that 30.46. Dollar peso continue to way down here. Um, Dollar peso broke lower to end the week. The pair will be seeing this. I don't know why it takes me up to update it, which I already did. 2174 was that key area, and we opened the door to target 2147. Yesterday, we got to as low as 2173. Well, I did get to 20, and our bias chart support for yesterday was 2168. You can see here we're still open to moving down here 2147, but yesterday the key weekly level yesterday was, well, for last week was 2174. Our bias chart yesterday was 2168. So we're going to go and keep the 2168 if you're with us yesterday. And the only difference is our resistance will move down to 92. And on to the dollar yen. Same thing on a weekly chart to see better significance. The dollar yen tested the upside on Monday, finding offers above the bias chart resistance at 592. I think we topped out at like at 106 or something like that, which will remain resistance, which is going to be 592. Support will be 537. So there we go. And the cash dollar index. So the dollar index slid further towards a major trend line just below the support level, which we had yesterday, which was 91.94. The index looks vulnerable to a test of 91.42, confluencing with 91.42, the 78%, which we detailed at the beginning of the show. Resistance will be 92.47. So this held yesterday, but that was yesterday. Okay, now let's go and move into the cross rates. Same thing here. As of all the other pairs, we covered all weekly charts yesterday, with the exception of Euro New Zealand. That one had not moved, so we were able to just still maintain looking at it on a daily. But everything else we had to look from a weekly perspective because of some of these moves. So you can see here, not only did we get up here to 71.27, we've even gone above it here. So resistance would be right there, which is going to be 71.82. I will say I like this platform so much better. It's so easy to navigate and go from a weekly chart into a 2-hour chart, and then I can actually just quickly just go on and move into the 2-hour levels right there. It makes it so much more easier. If we were to break lower, doesn't seem likely, but that would be support down here at 71.26. We do have this level here, but this would be where the support would come in. We could test it, but the true support would come in at 71.26. Onto the euro yen. So one of the things we did mention in our analysis from last week was that we mentioned thrice which is 3 times, thrice it challenged 26.48 pairing back. This is how we began to, that's how last week closed. And you can see how we started pushing up higher. Now we'll take a look at the daily. And you can see here, we're trying to make another run back up here, challenging 26.48. This is how we finished Friday. It looked like we were going to pair back, and we came right back. We're just above the 26, challenging the 26.48. Potentially, we can still move up, which is going to be 27.08. Still a possibility, but we are struggling here at the 26.48, just a hair above it. Interesting. I mean, Euro's trying to give another push. I don't know if it'll have enough to get all the way up to 27.08. We'll just go with yesterday's high, which is 26.83. And support. At least for now, it's going to be 26. That's too high. We'll go with this high right there, which is going to be 26.24. Onto the euro wad. And you can see here, we're just dipping back here. Actually, I think we had our bias chart support for yesterday at 60, 65, looking for a potential move at that level. Let's take a look. Yeah, we did 60, 65, which is going to remain the same. We're looking at the weekly, so this is still the same bar, but you can take a look at it on the daily. Obviously yesterday, and here we are today. Still the potential to come down here to 60, 65. If you were to tighten it up, they are holding support. You see where this open is? That 61, 64, and that appears they dipped just a hair below it, but still the door's still open for 60, 65 here. Um, and the resistance would be, looks like 62 and a quarter. And onto the euro, kiwi. This is one that we kept as a daily because we had not moved any at all. And looks like no changes here. 75, 85, 77 and a quarter on the upside. That will still remain the same. So with that, we'll move on to the RCN. Once again, I move into the weekly for perspective. Man, this thing is blowing and going. Not sure why this. Guess we had that as an extra. I guess we left that up here. Interesting. Still continuing to move higher here. That would be resistance at 78.58. Right there. Comes out at 79. Well, that's what we're testing here. Not really anything definitive that you can see here. Good level right there at 78.08. The high so far 78.40. See this low here comes in at 78.18. It's had a pretty phenomenal run. Let's see if we can't. $78.14. $78.14. This is off of it. Yeah. It's still off. Yeah. There we go. That one's right. And that's off. And that's going to be 78.14. So it's actually 78.11. And let's go move into the guppy. Oh, we will continue to push higher. Let's see here. Right there, it's going to be 49.29, which would be the next area for it to go to. I apologize, 42.29. With support, it's going to be right there at that level, which is 40.97. And we do need to get the support for the LCN. Right there, 77.89. Well, actually a little bit lower, right there. If we do bear bat, it's going to come in right there, 77.78. And lastly, the sterling nod. We're just holding near these lows. Let's take a look at the daily. Same thing here. So no changes here on sterling odd. We had 82.25 on the downside, 80.68. Yeah, 80.68. So that's going to remain the same right there. And euro dollar still staying pretty firm. Indices remain still fairly strong. With gold really testing up here closer to the 2000 area. We'll just take a quick look before we take off. You can see here gold, we've already challenged up here at the 2000 area as the dollar continues to sell off. And I'm even surprised, although potentially we can get down there, but because it wasn't that long ago that the dollar, it was in April, that the dollar was way up here in the sky at 103. And then, of course, the Fed had to do those, the dollar lending facility steps. And from there, we just kept selling off. We are a bit of an extreme, but indices continue to move higher. I mean, we're starting to see a little bit of divergence. SPOOS finished a little bit lower yesterday, while NASDAQ went to a new high, and then Dow actually sold off. But other than that, that's it. I mean, it's pretty much the same old with the dollar weakening. So with that, I'll get the buy chart posted, and thanks for joining us here on the European Crossover webinar.